which one you think is the most underappreciated name right now in your portfolio that you'd be looking to add positions to?
What's up, guys? I'm back like I never left. In this video, we are going to be talking about Workhorse and Cathie Wood's favorite stock right now. We're going to go over exactly what happened to this stock market and what to expect for tomorrow. So I'm going to cover all this important information coming up. Now, before we get into the video, I appreciate if you hit the like button. If you have any questions, any comments, and make sure to drop in the comment section below and check out the link in the description box to get free stocks, free Bitcoin, and join the Patreon page if you're interested. So as you can see over here, the major headline that made Workhorse stock today spike up significantly is that the US lawmakers propose giving USPS $6 billion for electric delivery vehicles. So this is one of the things that we talked about in the past that can shift a lot of things for Workhorse stock, but of course this is just a proposal at this point in time, so there's still have to be a long time out for them to even take into consideration the $6 billion that they want to allocate to Workhorse. But in spite of the news that came out, we have this specific spike that happened right when the news came out. Workhorse stock opened up around $13. It spiked all the way to around $17 and it got halted and then it pulled back again. Now we're sitting at around $15.50, and in after hours it's already up close to 1%. So what to expect for this stock moving forward is that it's going to be super volatile just like this, because there's still talking to the USPS in spite of what happened to the USPS contract, them not getting even a slice or even a share of the USPS contract. And they've been talking back and forth with the USPS. They had a meeting on March the 3rd, but they said that they're not going to disclose what happened. And the only option for Workhorse right now is for the government to step in and fight for them in a way. So this is going to be vital for Workhorse moving forward. So definitely keep an eye on it, because the stock just keeps going up and down a lot significantly. So if you're still holding this company, there's definitely more brighter news, I think, to come for the future in spite of what happened to this stock. Drop all the way 40%, but I believe it could potentially recover in the future, because we all know the future is going to be electric vehicles, and this is the company that can definitely benefit in spite of what's going on around the world, policy changes. All of the other countries also stating that they're going to be moving forward to electric vehicle companies. They're going to implement some restrictions on the type of vehicles they allow on the roads. So Workhorse is an electric vehicle company that produce vehicles that are fully electric, and they can take advantage of what's going on around the world. So definitely keep an eye and keep a watch on Workhorse stock. Now let's talk about a company that Cathie Wood likes. We're going to hear from Cathie Wood what she has to say about this company, and I'm going to come back and we're going to go over and talk about this company in detail.
We could go through a number of stocks that you like and that are all high interest on the street, from Palantir to Square. Why don't you give us, besides Tesla, which we know you're a big fan of and your conviction has increased there, which one you think is the most underappreciated name right now in your portfolio that you'd be looking to add positions to?
Well, we just went through this morning. Invitae in the molecular diagnostic space is probably one of the most important companies in the genomic revolution, and it is getting hammered. It's a company that has had historically small cash cushions, although they've rectified that with offerings, which is great. But it's investing aggressively to be the leader in the molecular diagnostic testing space. Many people, the disconnect for many people here is when they think of lab tests, they think of LabCorp and Quest Diagnostics, which are effectively very mature companies, commoditized, value stocks. And so it is a little bit like Tesla in the automobile industry. The new lab tests, which are going to be informed by artificial intelligence and big data and supercomputing power, are, we believe, in a winner-take-most market as we move into personalized medicine, much different from one test for all, although we'll see multi-cancer screening certainly in that realm. But we think the move towards personalized testing is going to give just a few companies the lion's share of the market, those companies with the most data, the highest quality data, and the best AI expertise.
The ticker symbol for this company is going to be NVTA. As you can see, it's been trending down in spite of what happened to the overall stock market. You know, we have some sectors that are getting beat down. This is one of the companies that is down also. It's down more than 37% from the highs, but you saw Cathie Wood mention this company. The stock is trending higher and higher, and as you can see, so it's providing a very solid dip right now if you want to get involved in it. You know, to go in detail exactly what they do when you visit their website, they mainly focus on genetic information. So they state that your health starts in your gene, and this company makes it easy to access your unique genetic information so that you can take control of your health. You know, so it's all about genomics, and this is one of the companies to keep in mind if you want to invest in this type of technology for the future. And the stock, since the IPO, it went all the way down to around $7, below $5 at one point, and as you can see, it's sitting at $37. So we still might see more pullback to the downside. We have some solid support area right around $28, $26 area, so we'll see what can potentially be the bottom of the trend right now. So overall, this high growth, high speculative companies that ARK Invest picks, like, you know, Tesla, you have Nano Dimensions, and etc., you know, they're getting crushed right now because we have money flowing out of these high growth plays to bank stocks, recovery stocks, you know, the value stocks that are doing very, very well. So as you can see over here, NVTA as one of them that is pulling back slightly. As you can see, we have a solid support, as I mentioned, around $28. So you can definitely wait for it to pull back all the way, or if you want to get involved in it, do more research about this company before you get involved. But definitely keep an eye on it because ARK Invest definitely likes it. If you want to definitely follow up what Cathie Wood buys and sells, you know. So at the end of the day, you know, this year has been really rough for Cathie Wood. Her funds are down, and it's very continuously going to the downside in spite of what's happening to Tesla, Square, Roku, and etc. They have a very high growth stock portfolio, so right now the market is not really in favor of the ARK ETFs. But of course, you know, nothing's gonna last forever. Once a reversal happens, once this thing stabilizes, we can definitely see some huge growth potential and money flowing back into the high growth stocks when the economic conditions are favorable. So now let's talk about exactly what happened to the stock market. So as you can see over here, as I mentioned, you know, we have some high growth, you know, technology stocks that are getting beat down, like Tesla minus 5%. At one point, it was below $550. You know, Apple's down more than 4%. Semiconductor stocks down. Microsoft, Google, Facebook, you know, all of these high growth tech companies that have been dominating for the past few years are having a very fantastic pullback. Even Netflix is pulling back way below $500. But you see that there's still other sectors that money is flowing from these huge technology companies to recovery stocks, like you got the cruise lines. We even have airline stocks that hit new 52-week highs today. We also have high financial stocks. Of course, we have the stimulus package vote coming in tomorrow, so this is going to be vital if you want to play the interest raise in the future. We definitely expect an interest hike coming up within the next few years, so bank stocks are going to be the one that's going to be benefiting. So definitely take into account adding a bank stocks into your portfolio. We also have, as I mentioned, some energy stocks that did not participate well today, but they're still holding strong. They're not selling off just like the big tech companies. And we also have utilities, and we also have the industrials like Boeing that did very, very well today. So at the end of the day, make sure if you have a long-term portfolio, make sure you diversify. Make sure you manage your risk before getting involved in any of this high growth companies at the current moment. They are dipping a lot. So I suggest you dollar cost average if you believe in the companies, or if you don't have money, if you want to wait for reversals to happen before getting involved in it. That is also another option. But that's going to be for the video. If you have any questions, any comments, and make sure to drop it in the comments section below. Tomorrow is going to be super vital. We'll see what's going to happen once the $1.9 trillion COVID relief bill is set to be voted in the House, you know, so keep an eye on that. But if you have any questions, any comments, make sure to drop in the comment section below. Check out all the links in the description box if you want to get free stocks, free Bitcoin, and join our Patreon page. But I catch you guys on another video. Let's get it for tomorrow. Have a wonderful day.